Hello there, traders. Welcome to today's live stream. It's the 21st of January. Can you believe it? We are in the final couple of weeks of January already. I hope we're all doing very well. My name is Kibbler, Senior Market Analyst at Blueberry. I'm going to be taking you through all things markets today. We're going to be having a look at some of the data that has been released, some of the data that's coming up, as well as some key charts to watch. So, who watched President Trump's inauguration yesterday? Very interested to know who was watching that. I watched it, watched his speech, and it was quite an interesting speech. It didn't really lay in too much details with regards to things like tariffs, which was highly anticipated. I think that's why we actually saw a very shallow dip in the US dollar index futures. Market actually traded a little bit lower. You know, we actually, if you looked across the board, euro dollar performed well yesterday, pound US dollar performed well, even Kiwi dollar, Aussie US dollar performed well yesterday. So actually, dollar had a weaker day yesterday. Whether that's because no US markets were really there to kind of fight back, but you know, very interesting to see that we did get that sell-off with regards to the inauguration as well. Just nothing. I'm very well, thank you. How are you? Hope you're doing well. Good afternoon to you as well, 𝖾𝖥𝖣yiFX. Here to learn more about fundamental analysis. Well, hopefully you're in the right place for that then. I am I would say, macro trader with a technical, I blend the both fundamentals and technical together basically. We use a lot of commitment to trader reports here as well as seasonal analysis. So if that's something that you've never thought about or something that you want to try and learn more about, then yeah, you're definitely in the right place. So welcome to you. We're going to talk about some fundamentals first, because there was some fundamentals that kind of drove the markets going into yesterday. One of those being the President Trump inauguration. We also had some data out of China that kind of went out under the radar, which was the 1-year loan prime rate and the 5-year loan prime rate. So just think of these as interest rates in China, and they were maintained at 3.1% and 3.6% respectively. One big piece of data that came out of the UK was the claimant count change. So the claimant count change in short form is basically very similar to the UK's unemployment rate, right? It is how many people are claiming unemployment benefits within the UK. And this actually came in a lot better than was anticipated. If we just have a little look at this chart here, and what I'm going to do is I'm going to take off the forecast line. I'm just going to put in the revision bars in as well. So the revision on this was quite interesting. So we actually had the report come out in December as 0.4%. So that would have been November's figures coming in at 0.4%, but they got revised down to minus 25.1k. So that is quite a significant. And if we look at the UK's performance when it comes to the revisions, every kind of month for the sort of half of 2024, the revisions have come in lower than the actual announcement, right? So there's been this significant downward trend of the claimant count change, and that means less people are claiming unemployment benefits. Why is that important? Well, it just means that maybe more people are working in the UK, whether that be sort of lower labor sort of employed people, or whether it could be higher employed people. Now, if we look at the average earnings index, that actually climbed to 5.6%. So again, average wages or average earnings are starting to climb on a 3-month period. So actually in the UK, when we talk about sort of the UK's problems at the moment, especially when it comes down to GDP or gross domestic product, we know that GDP is pretty much flatlining at the moment, or stalling, or at least starting to go a little bit lower in the UK. So that is this kind of tells us the health of the UK economy, GDP does, right? Now, if GDP is falling, then it's less likely that we're going to see a lot of investment into the pound, because the market is basically slower, the economy is slower. That can lead to all sorts of problems, and it could ultimately lead to the Bank of England cutting interest rates, which is what the whole game is about. So GDP at the moment is starting to fall, starting to kind of stall essentially. The reason being is because of the fiscal policy in the UK. So if you don't know the difference between fiscal and monetary policy, fiscal policy is anything to do with a government, okay? So you could say the US government, or government in wherever, Australia, New Zealand, or whatever. They have fiscal policies, and they can help an economy by doing sort of two things really. They could either reduce taxes, okay, or they can increase, I'm doing this with a mouse, so sorry about this, they can increase government spending, okay? So that usually can help an economy, right? Whereas at the moment in the UK, what we're actually seeing is that we're actually seeing a decrease in government spending and an increase in taxes, which is slightly contractionary. So that's why we're seeing this kind of slowdown in the UK right now. But when you take a look at sort of the employment side, how much we trusted this, you might have to take with a pinch of salt, but this is quite significant in my opinion. Seeing this sort of fall in the labour market there could give the pound a little bit of a boost, right? Just in this kind of short-term period. I still think long-term to mid-term, still think the growth in the UK is going to be under pressure. But the fact that the labour force is, you can kind of take this as the labour force could potentially be growing, then that is a potential sign that we could see inflation pressures essentially stay a little bit more higher, which is the problem that we've got in the UK at the moment. Inflation is still at higher levels. Bank of England don't want to cut interest rates because of that. Labour market's starting to get a little bit better, okay? Good afternoon, Rye Guy. Hope you're doing well. Bongo, good afternoon, John. I'm looking forward to seeing your currency strength meter. Yes, we'll get onto that very, very shortly. And Just Nothing is eager to understand the anticipated performance of gold in the near future and will greatly appreciate the analysis. Yeah, we'll get onto gold as well. Gold doing really well, actually. Started to see a little bit of an uptick in gold prices. That's something that I've been looking for. Been looking for silver longs as well. So we'll break down both of those markets and see if we can get any kind of opportunities surrounding that. I'm just looking at Swiss yen at the moment, because Swiss yen has been a market that I've been very interested in. I can see that it's starting to sort of continue that breakdown as well. Still holding a short position on Swiss yen at the moment. So we'll go talk about that in a little bit. But yeah, very interesting data out of the UK. Kind of put a little bit of the brakes on the pound weakness that we've been seeing in the markets. If you take a look at sort of pound US dollar prices at the minute, we can have a little look at sort of those prices just kind of stalling now. So we had this really nice sort of rally to the upside that was basically formed off of the sort of weakness that we saw in the US dollar. We've now come back up into the 123 handle on the pound. But yeah, this is going to be a sticking point. This is a kind of point where, are we going to get that pullback or not? Looking at the weekly chart, there was a good scope for a little bit of a rally. I discussed this in the week ahead analysis. We were in this sort of zone down towards the sort of 121 handle, and we've fallen a long way, right? So if we think about what happened at the end of September, start of October, where we had this real influx of US dollar strength, pound was one of those that suffered, and we're down sort of 9.9% from those highs. So we have to expect at some point we're going to get a little bit of a relief to that downside move. Do I think it's going to be a sustained relief though? That's the thing. I don't think we're going to see this huge sort of trend reversal and market's going to start pushing higher again, because of the fact that President Trump has come in. I just feel like we're going to see maybe some more US dollar strength in the near term. So whatever pullback we do get, I think would be met with some further sell-in pressure. But that being said, the market doesn't move in straight lines, right? It doesn't move in ways that, can sometimes make sense, right? So what we can do is kind of analyze the technicals to give us a better influence on, or a better grasp of where the timing might be. So at the moment, we're pulling back. I would say now we're starting a secondary phase in the weekly chart. That can lead to a bullish trend on a daily chart. So I am very cautious of selling pound US dollars right now. I like the idea of being a seller, but I don't want to fight against this narrative here. We could continue a little bit higher. That 125 handle is a really nice level where we saw selling come in the past. So, one or two things is going to happen. The price is either going to push towards 125, or we're going to see a hold here at this 123 and continue lower. I don't really see us kind of breaking into fresh highs unless something drastic changes here for the UK's outlook. Don't really see that happening just yet. One way we can monitor that is our lower time frames. If we look at the 4-hour chart right now, what is the 4-hour chart doing? Well, it's making higher highs and higher lows. So do you want to go against that right now? Absolutely not. You want to be waiting for price to kind of try, maybe even fail to make a new higher high, then come in and then make lower highs and lower lows again. So I'm just patiently waiting just to see what we can get going on here at the moment. If we look at it from a sort of a picture of technicals, technically this chart is still to the downside. We're still below the 50 daily moving average, which is a big sign for me to still remain bearish. So at the moment, not being a huge buyer of the pound, but also not ready to kind of sell pound US dollar here at the moment. Other markets that we can take a look at, because we've got other data coming up later in the week. I'm just going to go over what's coming up on our sort of future as well. Wednesday, we don't really have anything going on. Thursday, we've got some CAD data as well. We've actually had some CAD data. We've had CPI come out. So CPI is the Consumer Price Index, which is the sort of measure of goods or goods and services. And we can see that the prices are now falling. It's now negative 0.4%. So prices are actually falling in Canada from a month-to-month basis. If we look at trimmed CPI, which is more like core, okay, so core CPI takes out food and energy. That's meant to say core, but that looks like a A. That fell to 2.5% as well, and also revised down to 2.6%. So in Canada, there's a bit of positivity in terms of inflation pressures. Inflation is coming down, which is great, which is what the Bank of Canada want to see at the moment. But the problem is CAD is getting sold off aggressively still. If we go just flick over to the US dollar CAD chart, the market is all over the place. We've just basically continued to move sideways in this range, this minor range, which has been sort of capped at the 145 level at the moment. Price tried to break through it, failed to break through that 145 handle. Now, if we take a look at what's happened to CAD prices, in December or October, I should say, through to the end of the year and the start of this year, you can see that we've actually fallen over 8%, which is an incredible move when we're talking sort of FX markets. And the big driver behind this was the fact that Donald Trump got into power. Donald Trump has been talking about adding 25% tariffs onto goods and products from Canada, maybe even on oil. So, there is a certain sort of weakness to the CAD coming from that. And I don't think until we get some certainty on what those tariffs are going to look like, certainty on what Canada can do to kind of put pressure on the US in turn, I don't think the CAD strength is going to be there for a little bit. So the problem we've got at the moment, dollar is going to dominate, I think. If we go take a look at our 10-year yields, they did come off a little bit. They're now trading up at 4.5%. They were trading up towards 4.75%. They have tapered off slightly, which would be a welcome relief to the US dollar. But, you know, if we break this 4.75% again and head back towards 5%, then US dollar strength could spike higher still. And that's the real risk at the moment to the market, I would say, is that we're going to see a continuation of this sort of bullish US dollar, because if you look at it, you know, it doesn't look too bearish to me right now. Trend is still up on this weekly chart, so, you know, until we kind of break real trend here, maybe if we close back below the sort of 108s, then I'll be interested in being a dollar seller at that point. But I just don't see it happening just yet. Let's have a little look at the currency strength meter then. So currency strength meter, this is the tool that we use to kind of identify opportunities within the markets by taking a look across the board at currencies individually against each other, and then we make this nice little table here. So what is it telling us this week? There wasn't too much in terms of change from last week. The only real notable changes was the fact that the US dollar did start to come off the highs. So you can see that it was +7. That means that it was the strongest currency, but in a reversal zone. That's why it's highlighted in yellow. And you can see here that we're starting to see a little bit of a comeback from that now. So US dollar starting to show signs of a reversal. But try and pick the currencies that you want to trade that against. The only one I really like the look of at the minute is the Japanese yen. I feel like that's a market that I really want to continue to try and be a potential buyer of at the moment. Alongside that, I like the idea of sort of buying Kiwi dollars, but this is based off of a commitment to trader report signal, and I'm waiting to see, you know, what areas we could really buy Kiwi against. But on the sort of long and short side of things, you know, I want to be a buyer of yen, dollars and Kiwi, but this is tentative. You know, I'm going to have to wait for some good setups here. Seller of the pound, seller of the Swiss franc. I think that's where we want to be focusing some attention going into this trading week when it comes to currency strength and weakness within the market. Okay, so these are the ones that I'm going to be keeping a very, very close eye on going forward. Okay, Emmanuel, welcome. Hope you're doing well. Tunji, please make a video how you do analysis with fundamental analysis with the website you use. Yeah, I've got plenty of videos on how we do that. You can go have a little look in the catalog that we've got. Pretty much every daily analysis video will include some kind of fundamental outlook as well. Good afternoon to you, Vincent. I'm doing well. Can you reduce the volume of the background music? Yeah, sure, no problem. Give me 2 ticks. Hopefully that's a bit better. It kind of ebbs and flows, so hopefully when it kind of kicks up again, and you can get some kind of feedback on that. Just nothing. When tariffs are raised against China, which currencies or sectors are likely to benefit the most? This is a really good question, because this is the whole game with China at the moment, isn't it? I actually wonder if we are going to see as aggressive tariffs on China as we may be led to believe. There are a couple of reports out here that suggest that might not necessarily been the case. One report that I was reading earlier today was this one, right? So it says Trump pushes Europe into a lose-lose choice between the US and China. And this is basically kind of covering the situation that Europe are in at the moment. They're not in a great situation. They rely heavily on the US. They also rely heavily on China, but they're kind of siding at the moment with the US because they have to, because they can't really afford to get tariffed by the US at the moment. But something that was really interesting to me when I was going through this article here, and I'll post it in the chat so you can have a little look at it yourself as well. One thing that I took out of this, let me just go down and find it for you. So it was this, right? So it says, if Trump follows through on his vow to impose universal 60% tariffs on Beijing, that would likely reshape global trade flows, leading to a flood of cut-price China products being dumped into the EU through there. But then there was a part through here which says this, right? So, and I find this is quite interesting. So in 2020, after years of escalating hostility during Trump's first term in office, Washington and Beijing struck a mini trade deal aiming to increase US exports to China to ease their trade war. Now Trump has billionaire China dove Elon Musk in his ear, and he needs Washington to retain good ties with Beijing to keep his electric vehicle company Tesla afloat. This is super interesting now. This dynamic, the fact that we have Elon Musk coming into the Department of Government Efficiency in the US and heading that up, is going to be super interesting, because is Trump going to really listen to what Musk is telling him? And is Trump going to put Elon Musk in a position where, you know, it's going to impact the profitability of Tesla? Really interesting. So basically with that, has the EU worried that if it does break with China, an eventual rapprochement between Beijing and Washington could see the continent stuck out on a very shaky limb? So basically what it's kind of telling us here is that the tariffs coming to China might not actually be as aggressive because of the relationship that Trump needs to have with Elon Musk and the relationship that Musk needs for Tesla, which I find very, very interesting. So but yeah, on just kind of the scope of what tariffs could be impacted, you know, if we think about what the US needs, it needs sort of technology, it needs chips, it needs things like that. So I don't think they're going to tariff technology very heavily. They could obviously go back to tariffing huge sort of importers of sort of metals. So steel could be impacted pretty heavily as well. We saw that in Trump's last administration. He tariffed steel and other metals as well, like aluminium. He tariffed those quite heavily in China. So they could continue to do that because obviously they want America to be producers of them for themselves. So it'd be interesting to see what is actually tariffed. The problem is at the moment we don't know how aggressive tariffs are going to be, so we can't really have a concrete, you know, this is what's going to happen, this sector is going to be impacted by it. But definitely keep an eye on sort of the EV sector, because, you know, one thing that Trump wants to tariff the EU for is because he says that the US import a lot of cars from Europe, and there's actually a graph of this here. You know, most EU countries are net exporters to the US. So Germany, Italy, Ireland do a lot of business with the United States. So if they start to be, you know, start to get tariffed, they're not going to make as much money essentially from the US, which is going to have a detrimental impact on how, you know, their trade surplus essentially. So yeah, it's going to be really important to see, you know, what these kind of tariffs are going to do. You know, it says here as well, Germany and France threatens to impose tariffs on everything from cars to booze, pharmaceuticals, in response to their trade surpluses with the US. So yeah, for me, we need to wait to see what's going to be tariffed and to what extent before we can give some concrete answers on kind of what's going on in terms of what sectors to look at. But really speaking, I probably think sort of anything that they import heavily from China will be tariffed aggressively. Anything that they feel that they could probably produce themselves will be impacted quite heavily. But the EV space will be very interesting. I'd like to see the battle between Tesla and BYD over the next year or so. Pound yen, yeah, pound yen is definitely on the list. We've got short pound yen here. I can see this on my heat map as well, to potentially short pound yen. This was a market that we really like the look of going into last week as well. Market is down 0.45% on the day so far. The trend is lovely here as well. If I just get rid of that for a second, you know, we had this really nice rejection up at the 198. We created this new lower low. This is where we started to think about, you know, potentially getting short down into this demand zone, which is between sort of 188 and the 189 handle. So this is a market that I'm keeping my eye on. If we look at the 4-hour chart right now, you can see that, again, this is something that I always try and take note of, right? What phase is the market in? Think about your conditions within the market, right? So when I mean phase, just for those that aren't familiar with how I look at the markets, is I look at the market in two ways. So let's say, because I'm using a currency strength meter, I'm basically trying to take advantage of trended markets, okay? The way I see trended markets is you need one currency stronger than another. Simple as that. That creates the trend. How do you get those strengths and weaknesses? Well, there's kind of two sort of big drivers of it. One is your interest rates, right? So they're going to be your, if I can spell today, that would be great. Interest rates. I need one of those those pen things with the keypad. Interest rates, and another one is going to be sort of fiscal policy as well, right? Now, fiscal policy doesn't tend to, impact it for a long period of time. It usually kind of comes down to the monetary policy and basically where interest rates could potentially be going. But essentially, this is the main driver for me. It's interest rates. Where are they going to go? Who's holding interest rates? Who's slowing the pace of cuts? Who's being more aggressive with cuts? The other way you can have a little look at it as well is the currency strength meter. My currency strength meter is based off of technicals. So, it tells me what currencies are strong, what currencies are weak. So I'm looking for those kind of advantages and disadvantages of that. But essentially, what am I trying to do? I'm trying to find currency strength, currency weakness. So if a currency is stronger than one, so let's say this is pound yen chart, right? And the market is making higher highs and higher lows, that means that pound is stronger than the Japanese yen. Okay, simple as that. But what we have within that within that trend is we have phases, right? So we have the primary phase, the secondary phase, the primary phase. Now the secondary phase is your kind of pullback phase, your short phase within the market. Your primary phase is that sort of impulse higher, or that impulse leg, the one that kind of lasts a little bit longer. Now what I try and do is when we then start to form into the secondary phase, right, I want to try and identify when we turn from that secondary phase into a primary phase. And there's a few ways that we can go about doing that, in my opinion, anyway. So typically, let's say this was a daily chart, okay, which is this black line in here. So we have a daily primary phase, daily secondary phase. The 4-hour chart is going to be in blue, okay? So what you typically see in a primary phase is the market makes higher highs, higher lows. And in a secondary phase, it'll make lower lows, lower highs, okay? And again, in the primary phase, it makes higher highs, higher lows. What I want to look for then on the 4-hour chart is when we start to see that the lower lows start to fail, okay? And we start to produce higher highs, higher lows. That to me is a sign that the overall higher time frame trend is going to continue and that we can potentially try and be a buyer of that market. Same on the downside, okay? You have your primary phase, secondary phase, primary phase. Then you have your, your downward trend, your upward trend, your downward trend. What I'm trying to do is find those moments, find that moment where we get through and break trend on a lower time frame, which signals a potential continuation of the overall sort of trend within that market. Okay, so let's have a look at an example. So pound yen here, for instance, we've been looking at this for a while and we've been talking about the fact that the market is making lower lows. Okay, so we have a low, a lower low, we have a lower high, This was the high, and we have a lower high. Now, what you can do, and this is good just practice to do if you are still kind of confused on when to try and find these, highlight the turning points. Okay, you can do this. This is really good to do in hindsight because you can see where the market has turned. And what you want to do at those points is highlight the lower time frame change. Okay, so if I go to a 4-hour chart here, do you see quite clearly that the market changes from being bullish to bearish again? So for the example number 1 up here, what happens is the market starts pulling back. Okay, we then get a move in, the market forms a low. Okay, now in this instance we don't get a higher high, right? It just kind of pulls back, but what you do get is this change here, which then creates the lower low. So lower high comes in there because that's now confirmed by this lower low. So what you want to try and do now is look for those kind of short trading opportunities. You can go lower, you know, I don't mind looking at the hourly chart as well. This just gives you a sort of earlier insight, and it can give you a bit of a clearer insight. So the market's making higher highs, higher lows. Where is the low? It's there. It gets broken. Market starts trending lower. Okay, what happens here? Market is making higher highs, higher lows. Where is the significant low? It's there. It breaks. Market trends lower. What's happening now? We're getting higher highs, higher lows. We've broken trend there. So on the hourly chart on pound yen, it's looking pretty good, right? It's looking pretty good for a potential continuation because we have technically broken this upward trending cycle, because that here is the last significant low. Okay, so I would be looking for, you know, potential short trading opportunities on pound yen. I'm just giving myself a little bit more of a higher time frame to look at because I'm watching the 4-hour time frame. The only reason why I'm doing that essentially is because in January volatility can be a bit all over the place, so I'm just giving myself a little bit more breathing space at the moment in terms of trades. So yeah, that's the way I see pound yen at the moment. Obviously, when we think about what's going on in terms of a fundamental picture, you know, what is really going on here, right? If we take a look at what's going on in the UK, okay, I'm just going to put this, and we'll put that up to 28, and let's just say UK outlook. Okay, so if we look at positives, negatives, you know, what's the positives for the UK right now? There's very few, but we can point to one already, which was, you know, climate count change lower. Okay, so that's beat expectations. Don't really see much positives from that. You know, we've got slowing GDP, higher inflation. What else is pretty negative? Yeah, poor fiscal policy. Okay, so, you know, there's not too much in the way of positives when we look at that outlook. Now, when you look at Japan, okay, what's going on in Japan? Well, there's a lot of positives in Japan, in terms of currency appreciation, right? First of all, you've got BOJ wanting to hike. Okay, why are they doing that? Strong inflation. Okay, higher wage, which then creates inflation. Okay, I would probably say lower oil prices, which is probably good as well, because Japan are importers of oil. Okay, so, you know, when you look at sort of negatives, technically they still have a low interest rate, right? When you compare it to others. So they're still going to probably get a little bit of selling pressure because of the back of that. And obviously it's a major risk flow asset. Okay, so typically when the market is coming out of sort of risk assets, the Japanese yen can benefit from that wildly. But when the market is in risk on, the yen weakens quite significantly. But essentially, what's this all leading to? Well, it's leading to, for me to say what the BOE, okay, are more likely to hold interest rates, right? But essentially are going to have to lean towards cutting soon. The reason why I say this is because of this here, right? Now, higher inflation is not good because that will stall the BOE's move, but slowing GDP would be a big factor into, you know, future problems in the UK. So I think that the Bank of England are going to be cutting rates this year. I don't think they're going to be cutting rates necessarily like in the first quarter. Maybe second quarter is where we're going to see some real pound downside. But if you think about what the BOJ are doing, they want to hike interest rates. So you've got two sort of opposing sort of central banks there. Probably a better one is the Swiss franc as well. So this is a real kind of big reason as well why we're seeing some of that pound downside and some of that yen strength at the moment, is because the BOJ want to hike interest rates. And that's why I'm focused as well. I'm looking to try and buy the Japanese yen against weaker currencies. And one of those weaker currencies at the moment for me is the pound. When the VIX is below 20 and yield is about 4% low for US dollar, where is the currency going to go to? I'd say when you see the sort of volatility index moving lower, that's typically a good thing for your sort of risk on assets. So your stock markets tend to perform pretty well on that. You know, dollar usually is more of a risk off sort of tone. So, you know, if you think about what's happened recently on the volatility index, we'll just go to a daily chart. You know, when you see that sort of increase in volatility, so this was the increase in December here, you know, typically that can be pretty good for sort of US dollars, negative for stock markets. Other assets probably would have benefited off the back of that. You know, some, I would say probably gold, things like that would benefit off a lower downside volatility index as well. Gold particularly performs pretty well when volatility is lower, and you can see that at the moment. You know, gold prices are rallying at the minute, and that's something that you can kind of keep an eye on. Silver is a market I really like. I feel like this has some good potential upside, but gold, we talked about the potential for this to kind of break out of this resistance zone and head up to the kind of all-time highs there. Gold would perform, you know, well in these conditions, in my opinion. If we do start to see, especially that kind of move into risk on, and the market feels comfortable, then we're going to see some further upside. Gold could have a tricky year. You know, it could have a tricky year. I think, you know, it really, really does depend on how Donald Trump, how aggressive Trump is. That's what I really want to say. How aggressive is Trump going to be? And that's going to be a real kind of highlight to what happens in the year, because actually when stocks fall, gold typically falls as well, because it's almost like they cash out on the sort of profits made on gold. So, you know, typically we could see a little bit of a move to the downside for gold. At the moment, though, this looks very bullish, right? You can see that we're breaking higher again. Weekly chart is still very, very bullish right now. There's no sign for me to suggest that this is going to move lower. You know, maybe if we see some very aggressive dollar strength, but the correlation between the US dollar index and gold right now is not there. If we go take a look at seasonals as well, if we just take a look at gold, typically in the early parts of a year, gold can perform pretty well. Okay, so if I just take off the current year here, I'm just going to put on the last 20 years of data. You can see that typically from sort of January through to sort of end of Feb, the gold usually has a significant rally in the market. So out of the past 20 years, we've seen 15 winning trades, 5 losing trades, 75% win ratio here with an average gain of 6.3%. So when you kind of filter that through onto the chart, so when does that usually begin? Around January the 6th. if we look at January the 6th, this is where price was. Let's just grab a little arrow. This was January 6th, just in here, where you get that bull run in gold, typically over a seasonal period. And usually it goes around 6%, and we're up 4.46%. So on average, 6.6% kind of takes us back into that all-time high there. So, you know, it looks to me like we probably will see a continuation of this gold move up into this area here. Would I want to be buying it beyond this move as a trader? No. This would be a good area, I feel, to take some profits. Last time we got here, we saw a significant shift, so I wouldn't be surprised if we saw that again. Maybe not as aggressive as this, but maybe just a pullback from there. So I like gold into that level. One thing that I've been looking to try and do is basically, again, just try and buy this on sort of trend breaks. Look at the trend here on the daily chart. This is what I was talking about earlier when you look at phases in the market. So that's a daily bullish primary phase. This is the daily secondary phase. That's a daily primary phase, daily secondary phase, daily primary phase. Okay, look what happens towards the lows of these. The market fails to really make significant lows, and then it starts to make higher highs again. The market fails to make a new low. What does it do? It makes higher highs again and continues to push higher. That's what you want to try and do. You want to try and gauge or capture those types of moments. Real good one here. Market pulls in, pulls down, rallies, consolidates. Beautiful consolidation there with a breakout. So that's a volume breakout there. That would have been a nice entry to be long gold. Stop losses below the low, and you could be looking to try and target up towards that all-time high there. So what I'll be doing is very, very similar. I'll be looking at this daily chart, because I can't get in right now because price has already moved a fair bit. But, you know, if we do start to see a couple of pullback days, you know, very slow candlesticks, very much like these ones in here, very shallow in range, that could lead to a continuation move for gold. So that's what I'm going to be taking a look at when it comes to gold prices right now. For the next few weeks, I want to learn fundamental analysis. What should I focus on? If you want to learn anything about fundamentals, I would start with interest rates. Learn everything you can about interest rates, what influences interest rates, and you'll be on a good sort of standing from there. One thing that I learned to do was read through a few of the central bank reports. So, you know, these reports come out for free, right? You know, a lot of people just don't have the time to go through it. So let's just show you an example. You could type in the Bank of Canada into Google, get the Bank of Canada's website, and most central banks have their own website, right? And if you go over here, there is sort of monetary policy, core functions here, monetary policy. It'll tell you everything that you need to know about their objective. What is Canada's goal? You know, the goal of Canada's monetary policy is to promote an economic and financial well-being of Canadians. Experience shows better ways to achieve this goal by keeping inflation low and stable. Okay, so that's one of Canada's main targets, is to keep inflation low. Okay, monetary policy tools. So this shows you the tools that the monetary policy they can take, essentially. So target for an overnight rate, that's your key policy interest rate there as well. So you can go onto a central bank website and learn all about what they are looking for. And then if you come over to, where is it now? Publications. Here we go. Monetary policy reports. So you can go and check out the Bank of Canada's latest monetary policy report, which was in October, right? And you can click on this, view it as a PDF. Okay, you've got 57 pages of notes to go through, but it tells you basically what they're focusing on. What are the current conditions? What's economic activity at the moment? Tells you about GDP, domestic demand, consumer spending, which is a very big one. We've got retail sales coming up tomorrow. That's going to give you an insight into consumer spending, because what is the main driver of a country's economy, right? It's the people that work for it. Okay, so if more people are employed, more people are working, more people are spending in the economy. What happens when loads of people are spending in the economy? Demand for a product goes higher, and prices move higher, essentially leading to inflation. It goes for everything as well. You've got business investment and sentiment remains weak, so that's a bit of a negative there for Canada as well. But yeah, this is all over. You know, if you want to go to the Federal Reserve, okay, federalreserve.gov. Okay, and then you can go to monetary policy here. You can get monetary policy transcripts from here, meeting calendar information, press releases, speeches, economic research. So some of the Fed's notes as well, economic data research, just in and on here. So there's loads of stuff that you can do to help yourself out by trying to understand what the Federal Reserve are doing, because that's a big driver of the economy, considering that the US is the biggest currency, right? It's the reserve currency of the world. So does sentiment analysis matter? Depends what your sentiment analysis is. I use commitment of traders reports. That is consider sentiment analysis, but for me, COT reports are an invaluable tool that I use, because I just feel like they think about what it's telling us. It's telling us where hedge funds are positioned, right? And in my opinion, hedge funds have to hire really smart people to do a lot of their analysis, do a lot of their economic research, you know, and so on and so forth. And they're going to be trying to, you know, buy into or sell into markets which they feel is best. So I feel like following those guys is a really good thing to do, and that's what the commitment of trader reports show us, because their positions are so large they have to declare it. And you know, this is where I do a lot of my analysis on the commitment of trader reports, trying to find opportunities. You know, look at this one, coffee. They are selling coffee or buying coffee at aggressive levels, right? They're buying it at levels that we haven't really seen for a little while, you know, considering that peak there, this peak here, right? Commercials are selling at those levels. Okay, so commercials are in the market to hedge their positions. Non-commercials are your hedge funds and things like that. They go with the trend, right? But look at the price of coffee. It's exploded over the past year or so. So this makes sense that they're buying into this market, because it's a trending market. It's going up. They're buying into that trend. The problem is they then go to levels of extremes where there's no value for them anymore to be a part of it. So you usually see a bit of a pullback because of that. So we could actually see some coffee shorts coming into play. Let's have a little look at the coffee chart. Actually, I haven't looked at it in a while. Let's go to the futures side. That is cocoa. Here's coffee, right? Look at that move from 2024, or well, actually end of October 2023. If you'd bought coffee, it went up 135%, which is an aggressive move higher, right? So commitment of traders report right now is showing me that there's an aggressive position being held here by the hedge funds, and that can turn around. Let me actually just put the COT signal on here, right? And you can see that we have a commitment of traders sell signal there, right? So there's potential for this market to roll over eventually. I don't know if anybody trades coffee, but that's something to have a little look at going into the future. Good afternoon to you, Innocent. Which web should I use for all interest rates? Trading economics is a really good start. So if you go to tradingeconomics.com. This is a really good start on where you can get some information. If you go down to this little area here, it's got sort of country, GDP growth, interest rate, inflation, things like that. So it's got everything you need to know. If you just click this plus button here, you can see every country's indicators pretty much. So yeah, once you click on the United States, it'll bring up the indicators. Okay, so you can have a little look at the unemployment rate, for instance. You know, unemployment rate is a big one to look for, because if it goes above 5%, then there could be a recession. We're currently trading at 4.1%. So, you know, there is a use behind kind of every piece of economic research. But I think as well, as a trader, you don't need to know everything. Okay, if you can know interest rates, that is a really good start. That's a really good start. Right, how long have we been running? We've been running about 50 minutes right now. Let's have a little look at some other markets that have been pointed out by the currency strength meter, and then we'll go from there. Because I was looking at the commitment of trader reports. There's nothing really here that's jumping out to me that we haven't already spoken about over the past few weeks. You know, one of the ones that I'm really looking at is New Zealand dollar. We're at the 2022 lows right now, and if you look at the difference between the sort of long and short contracts, or the net contracts at the moment, they are still at levels that we haven't seen in history. So I want to be a buyer of the New Zealand dollar. Against what, though, is the question, right? So that's where currency strength and weakness can come in. I like the pound, I like the Swiss franc. So I've been looking at opportunities potentially on those markets. So one of those markets could be pound Kiwi. This is in a secondary phase here on the weekly chart. So that is a downward trend on the daily chart, downward trend on the 4-hour chart. Okay, so I'm looking for opportunities on this market potentially, and I'm looking to be a buyer of Kiwi Swiss. Just waiting for my technical indicators to line up here, because we're still below the daily 50 moving average. We still seem to be failing at 51.50 as well. So I want to try and see price kind of breach that in here, and see if we can get a little bit of a move higher, because this chart is just a bearish one. So do I really want to go and buy this too soon? No. And look at the weekly chart there at the moment. I need to see some momentum here. What's going to be the catalyst behind that? I don't know. We do have some CPI data coming up in New Zealand this evening. CPI quarter on quarter, 0.5 to 0.6, coming down from 0.6%. We've not really got anything that's impacting the Swiss franc too much this week. But we know that the Swiss National Bank want a weaker Swiss franc. And they're trying everything they can to do that, even cutting rates very aggressively at the moment. So, yeah. Right, guys, we're going for about 55 minutes. This is how long I usually like to run these, to an hour or so. I'm going to leave it there. Thank you to everybody that joined me. We're going to be back again soon. Hopefully some point this week. If not, I will be posting a video anyway. That you'll be able to see some more research on. If you are new and you enjoyed the content here, please leave a thumbs up, hit that subscribe button if you want to see more as well. So thanks for watching, guys. Appreciate you all, and I'll speak to you later. Thank you.